Good morning, everybody, and this is your S&P 500 day trade setups for today. So just before we get down to the day trading levels, just have a look at the macro levels here. So firstly, start off with the monthly. Last month we closed on our low. Pretty rare that that happens, but that is what happened. And we've also closed in this area of monthly support. Now there's no monthly fractional here. So let's just get the right one here. So do that one. There's no monthly fractional here. We closed just below this level. And if I put up the next tail there, so take those two tails, that's a zone that we're in at the moment. Dropping below that brings a little bit of pain further down, and the only other area that we've got would be down here at 3400. So oscillators also eased off quite nicely. Look at this divergence that has formed. So there's the low, current low, here's a low, and we've got a lower low on the oscillators. So it's also end of quarter, so end of the third quarter, we're now going to start the fourth quarter, and yeah, it doesn't look very good for this year at all. So we've basically fallen. Just look at it this way, we've fallen 20, where are we now, 20, well, I'll call it 25% at the moment. So massive fall over the past 2 years. Last thing I just want to highlight here on the macro view is have a look at where the 50% Fibonacci is. Just below where we are. Look to the left there, and in fact if you just start drilling down to like the weekly, you'll see there's a gap here that we're probably going to close, and there's the previous swing high there. So, and you can also see exactly where the 61.8 is, all the way down here on this swing high here. So at the moment everything is still bearish, trend is down. The only trouble that I have with the look that we have on the charts at the moment is when we get to the levels we need to trade, you'll see we're quite far from the moving averages. Oscillators, we've got diversions here on the 8th hour, so it would look like, to me anyway, that we have some kind of a pullback. I'm just going to adjust this level to there, and I'm going to add that one there. So just taking up these two tails here, because we've broken below them, those levels are back into play. So what we'd be looking for is to continue with this journey down, but obviously I don't want to continue from the area we are, so I'd prefer us to be up in this area. We're still very oversold at the moment, and you need to keep that in the back of your mind. So have a look at the hour. So we had a gap down this morning. We've already closed the gap. I would expect us to come up into this zone here, and there's probably a third level here, and I'm just going to use this one. There's actually 4 levels, but explain it to you now. This one is just a little bit close to here. So this is the previous swing low. Then we have this swing low, which there's 2 levels on and a third attempt. So this one is the one that looks like it is the one I want to play with, and that is 36098 or 3610. That is the area that I would be looking to continue this journey down. Failing that, I would expect us to get up to 36178, and then you can see that just above it is more structure, and then even further above is more structure. So that's kind of the view that I've got at the moment. Any pullback should be sold into. Trouble at the moment is that we're so far from the moving averages. I don't really want to get involved with selling short where we are at the moment. I need us to get back up to at least 36. So that's 3602, 3610, and then 3618 area. That's what I'm looking for. Now if we just drop down to the 15 minutes, is there anything we could have done on Friday? I decided to sit on the side, and probably the right decision. You can see we did bounce off here and then sold into the close, which is very rare that you see that before a weekend. So that just tells me that there's probably more pain coming. So that's the zones that I'll be looking at. One last time, we're looking at 3602, we're looking at 3610, and we're looking at 3618. That's what we're looking at. Your stop area, depends where you are, but this swing high here or the swing high here from Friday. That would be your stop area, or wait for price action and then have a stop right above price action and your entry just below price action. And what I mean by that, if you see an inside bar like that, you see, oh, we only had inside bars here. Any inside bar, you'll trade it below and down on the level if it's a pin bar or if it's an engulfing bar, same scenario. Here's an engulfing bar here on the structure. This is the structure here. You can see engulfing bar, level up. That's a range bar, not a pin bar, but you get the drift. Anyway, that's kind of my view for today. Just be cautious. Whatever you do, keep those stops really tight. We are extremely oversold, and we'll also be going into earnings season shortly now as well. So lots to look out for. And also, we have non-farm payrolls on Friday, so it could be another situation where we just wait for that data to see if we're going to get a chance to climb. Okay, so short it is, just short off structure. Otherwise, we sit on the sides. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.